Hi everyone and welcome to the channel. For the past several months, we've been reporting on a lot of talk from industry experts warning of an upcoming housing market crash. So far, it hasn't come yet. The market has pulled back 10 to 15% in some areas, but otherwise has stayed somewhat stagnant. But according to one billionaire, this situation is going to change dramatically in 2023. A warning of a major crash in the housing market has been issued by Barry Sternlicht, CEO of private equity company Starwood Capital Group. In a recent interview on CNBC's Squawk box, Sternlicht stated that the economy is breaking hard and that consumer and CEO confidence is at an all-time low. He cited the Consumer Price Index, CPI, as old data and pointed out that the rate of rent growth is slowing. This, along with the fact that there were only 500,000 single-family home sales, the lowest since 1952, is a clear indication that a major crash in the housing market is imminent. Sternlicht also criticized the Federal Reserve for being late to the game and for being too aggressive with interest rate hikes. He stated that if the Fed continues on this path, they will cause a serious recession and people will lose their jobs. He added that supply chain issues are being resolved and inventories are now backing up in warehouses, which is going to lead to huge discounting. The housing market has also been affected by skyrocketing prices and soaring mortgage interest rates, making the purchase of new and existing homes unaffordable for many potential homebuyers. According to the Federal Housing Finance Agency House Price Index, FHFA HPI, house prices across the nation rose 17.7% in the second quarter of 2022, compared with the same period last year. The FHFA HPI also showed that compared with the first quarter of 2022, home prices went up 4% between April and June. The trend is reflected in the FHFA HPI for the second quarter of this year, with the agency's seasonally adjusted monthly index for June being up only 0.1% from May. William Donor, supervisor economist at the FHFA's Division of Research and Statistics, said, "The pace of growth has subsided recently, which is consistent with other recent housing data." Sternlicht believes that a serious recession is imminent and that it will hit in the fourth quarter of this year. He also warned that you will see cracks everywhere. His warning of an impending recession is in line with that of legendary investor Jeremy Grantham, who warned investors of a potential stock market crash in his 2023 Outlook letter that was just published on Tuesday. Grantham's bear case scenario warned of a potential 50% decline in the stock market this year, as he believes valuations are still far too high even after last year's 20% decline. It's always wise to be aware of these developments and keep a close eye on the market. The current state of the housing market is a cause for concern, and it is important to be prepared for any potential crash. Before we get into our suggestions, jump down and tell us how you're preparing in the comments below. One way to be prepared for potential changes in the housing market is by diversifying your portfolio. This can be done by investing in different types of real estate or by investing in different markets. Additionally, it's important to be aware of the potential risks that come with the housing market. This can be done by staying informed about the latest news and developments in the market by watching this channel, as well as by consulting with financial experts. Another way to prepare for potential crash in the housing market is by being financially secure. This can be done by paying off any outstanding debts, building up any emergency fund, and making sure that you have enough savings to cover your living expenses for several months. Additionally, it's important to have a solid financial plan in place so that you can make informed decisions and take advantage of any opportunities that may arise. The housing market is facing the potential for a major crash, according to CEO Barry Sternlicht. His primary point is that inflation actually was transitory and caused mostly by supply chain shortages that are now being resolved. He believes the Fed has been too aggressive in raising interest rates to bring down inflation and that the impact of these rate hikes has yet to show up in the CPI data. All of this is essentially a ticking time bomb just waiting to go off. Thank you for watching, and if you enjoyed this video, please be sure to hit the like button, subscribe, and click the notification bell so you'll know when we release more videos on the housing market. Thanks, and we'll talk again soon.